Hey, my name is James Nicholson and welcome to this channel. Now in this video, I'm going to talk about, is the property market just about to crash? Now I'd love to hear your opinions on this in the comments, so do make sure you give us a comment while you're here. Now this channel is all about my property investment journey. I'm currently expanding my property portfolio and I'm building a portfolio for my two daughters, Georgia, who's 21. We've just bought our first property together in Doncaster, and you can check out the progress of that on this channel. We're just securing our second deal at the moment, so do find out what's going on with that. And we're building a portfolio for my little baby Amelie, who is just one. So to join us on the journey and to find out how that all turns out, do subscribe to the channel and hit the bell notification. Now, property, it's really something that British people are very interested in discussing. We all love it when our houses go up in value, but can that continue in 2022? Well, let's discuss that, because right now the average house price is at the highest it's ever been, and it's at £280,000, which is just crazy sums of money. Now, to be able to afford that, people need to use 11.5 times the average salary at the moment. So that means affordability is tough for people in this market. Now, does that mean that the property is going to crash? Well, two things. Possibly. And do we need to worry about that as investors? Well, as an investor, I don't think you need to worry so much about it, and here's why. Because when you're an investor, you should be buying and making your profit when you buy the deal, when you get into that property deal. Now, a bigger concern for me as an investor would be that lenders stop loaning money like they did in 2008. That was a really, really difficult time, because what happened then was you weren't able to get loans and they just stopped temporarily. Now, since that period of time, banks have had to have all sorts of new rules, and they have stress tests done them on a regular basis. And that's not something that I'm massively concerned about at this moment in time. So I do think that banks are going to still lend. I do think that they will get slightly stricter on their lending. I think they'll be more stricter possibly on the valuation of the property, because they don't want the market to suddenly drop 10% next year and suddenly they've got lots of lenders on their books in negative equity. So what we are seeing at the moment is lenders are down valuing, or the surveyors are down valuing, because they want to protect themselves, because they're judged in a year from now. Look, you were surveying this property, we lent out the money because of your price estimate, and now all the properties have dropped in value. So suddenly that surveyor doesn't look particularly great, does he? So to protect their skin, they are down valuing in certain areas. And so that's something that you need to be cautious about, is getting a down value. Now, how can you stop that? Well, you need to give them really good comparables. So one of the deals that I'm buying at the moment, which I'll explain more about once it actually completes, and there's a real very good reason why I can't talk about it now, which you'll understand when I tell you. But what we've done today is we've spoken with the agent and just said, look, I need some really good, solid comparables that I can give to the valuer. And we're buying for around £230,000 this property. And the good news is the estate agent is able to give me some very like-for-like comparables for £270,000 in the local area. Now that, when I present that to the surveyor, even if they do down value me, really helps my case. Now, other things that we need to worry about is, lenders I think are going to continue to lend, but I just feel that you need to be really buying well to make sure you're protected as an investor. Now, the next thing that could impact the market significantly, and I think even more so, is the interest rates, right? So interest rates are going up, and they're going to continue to go up for at least the rest of this year. We're going to have multiple increases throughout the year. Now, that means that the cost of borrowing money goes up. Now, does that impact an investor? does that impact the market? Yes, of course it does. But there's lots of people that are pretty smart that are just going to fix their deal for the next 5 years or 10 years. And so that means that they'll be pretty much protected through this inflation period. But lots of people are going to be buying new deals, and those people will be paying slightly more for their lending. Now, rents are going up because of that. So unfortunately, renters are going to be paying more money. So that kind of does protect the investor here as well. So that's a consideration. Interest rates, yeah, they're going to keep going up. Possibly that's going to impact the market. And I think that will cool off the market for sure. I don't think we're going to have crazy 10, 14% rises in house prices. Now, another thing that could keep the market strong is the stock markets and the cryptocurrency markets are not doing as well. And so stock markets have been down, particularly people that invest in America. And that could be British people, right? You can invest all around the world now, but the markets in America have dropped significantly. The markets in the UK have dropped and could be more volatile moving forward this year. So what is happening is some investors are coming out of the stock market, coming out of crypto markets, which have been hammered this year, and putting their money into houses because, as they say, safe as houses. So that's going to bring money into the market. Now, another thing that we need to consider when we're looking at are the prices going up or down, are we going to have a crash, is supply and demand. Now, we still don't have enough housing stock. Estate agents are scrambling to get stock. There are still way more buyers than there are sellers, and that's a good thing for keeping prices secure and safe. They can't crash massively if there's too many buyers and not enough sellers. Now, there are less people looking to sell because they want to see what happens in the next few months. And because of that, prices aren't, I don't think, going to drop massively sharply. Now, inflation is something that obviously is rising significantly over the last few months and is going to continue to rise through 2022. Now, we know that your electricity bill, your gas bill is going through the roof. That hits people that want to borrow. That hits normal people that are going to invest and buy their own family homes. So yeah, maybe their affordability is less. Food is more expensive. That does hit a market, of course it does. But historically, inflation has been a good hedge when you have property, because normally the prices do go up when inflation's high as well. Or at the very least, as an investor, inflation can be a good thing for you as well. So if you owe lots of money, I owe lots of money and I'm really happy with that, then the value of that money that I owe is dropping, right? So let's just say, for example, I owe 100 grand, right? So let's just say to someone we owe the bank 100 grand. Now the buying power of that today is 100 grand. I can buy 100 grand worth of stuff. Now let's just say, for argument's sake, that the market or the inflation continues at a 10% rate, then the buying power of that next year is only 90k, right? So I've lost money if I leave it in the bank, but I've actually made or the actual real pressure and how I feel like when I pay that 100 grand back, it's only going to feel like paying 90 grand back. I hope that makes sense. I'm trying to get across that in the right way. But inflation, when you owe money, is a good thing because the value of the money that you owe is dropping on a daily basis or a monthly basis. And so the 100 grand that I owe a bank is not worth as much. The buying power of that 100 grand in a year from now is going to feel significantly less. So that's good for investors. Now, let's just summarize it all. Do I think the market is going to crash in 2022? I don't. I don't think it is going to crash because I'm seeing investors coming in from other asset classes, and I think that is going to keep the market buoyant. Do I think it's going to go through the roof and go up 10% this year? I don't. I think it's going to be fairly level. It's already had some decent increases the first half of 2022. I believe that's going to start slowing down. So I think that the market going up is going to slow down significantly in the next few weeks and months. And so I think that you'll see less and less instances where prices of houses have gone up. But I could be wrong. And so they could just continue to go up, but I just don't see them dropping when we've got lots of people still trying to buy a house that haven't been able to find the stock that they want. Interest rates are still low. They are going up, but they're still very, very affordable. Like when we bought in 2008 and 2009, the interest rates were a lot higher than they are today. And so I think it's still very, very affordable to be an investor. But as I said earlier, the most important thing that protects your money, protects your wealth, protects your asset as an investor is to make sure you buy good deals and you make money when you buy the deal. You need to buy below market value. That protects yourself. And I think the best property strategy in this market is the buy, refurbish, refinance, rent the BRRRR strategy. I've got tons of videos on that. And the reason for that is because I think you uplift the value of the property. That allows you to pull out some of the money. You're not going to leave full 25% deposits in there. You might get all of your money out in the good instances. And that really protects you. It builds some equity in that asset for you straight away. And you're not having to leave big chunks of money in. So you're kind of protected with the market going forward. Let me know your thoughts though. Do you think the market's going to go up? Do you think it's going to go down? Do you think it's going to go sideways? I really genuinely want to know what you think. So do comment below. Smash the like button over here, guys. That helps me greatly with the YouTube algorithm. And do subscribe. Do subscribe and join us on the journey. Remember, we're investing in building a portfolio for my two daughters, regardless of what happens this year. And the reason I'm not too concerned if it does crash is because I'm buying and holding, right? And so I'm buying today, I'm holding for generations, and I'm not looking to ever sell any of my properties. I want to pass those down to my kids and their kids. And so I'm not fussed if we have a temporary drop. That means any deals that I do at the time of the drop will be cheaper, right? But I also don't want to miss out on opportunities today by waiting for something to happen that might never, ever happen. So that's it from me. I hope you found this interesting, insightful, useful. Comment below, let me know what you think. And we've got a new Facebook group called the Property Accelerator. Come and join us in there. Ask any questions you've got. Just get to know people in the property industry. You can find a link to that below. That's it from me. I'm James Nicholson. Go and check out this video over here. I'll see you soon. Bye for now.